FBN Quest is a Nigeria's investment and securities trading firm. Services Purchasing Managers Index report posted a third positive reading of 52.2 in the month of August. South Africa's fast food group Famous Brands buys Britain's gourmet burger kitchen for 2.1 billion rand, plus Mozambican president now appoints an IMF official as a new central bank governor. Thanks for joining us on the program. I am Bosin Namafaya. Welcome to the show. Let's get started. Investment and securities trading company licensed in Nigeria, FBN Quest, has released the country's overall gross domestic product as flattish in the fourth quarter of 2016. That's a forecast if the government is able to reduce the steady sabotage of its oil infrastructure in the Niger Delta. On Wednesday, the Statistics Office reports Africa's largest oil producer posting 2.06% contraction in the second quarter, but the Buhari's administration says outlook for the second half of the year is much better. In a report released Thursday, FBN Quest August Purchasing Managers Index, or the measure of manufacturing activity, posted a third positive reading of 52.2. 4 indices out of 6 were positive. The highest reading for delivery times was up, while the lowest PMI reading was for output. Analysts at FBN Quest say foreign exchange sourcing remains a major challenge for local manufacturers, although some are now able to substitute imported inputs with local alternatives. And we're sticking with a raft of manufacturing data around the world. The world's second largest economy, China, reporting today's PMI at 50.4 reading in August. That's up 0.5 percentage points from July figures. In addition, indicators of new orders and new export orders, as well as the purchasing price index, what they call the PPI, also took a rally last month compared with the previous month, that's July. Over the past 2 months, the National Development and Reform Commission of China have approved 12 infrastructure projects with an average or aggregate investment volume of more than 280 billion yuan. It is estimated that China's market demand will gain a steady momentum in the future.
The PMI gained a rebound in August, amounting to the highest point in the beginning of 2016. The manufacturing sector has also featured a pickup in both production and demand, as well as an optimized structure. The capacity has been controlled and the demand has been released. Therefore, the market demand and supply have further been optimized, demonstrating that economic operation is seeing improvement in quality.
We're keeping with manufacturing data all around the world. From China, we step into the UK, where the manufacturing index staged one of its sharpest rebounds on record in August as factories recovered from the initial shock of June's votes to leave the European Union. It was called Brexit. That data released today helped by a boost from experts from Sterling's post-Brexit slump. The PMI jumped to a 10-month high of 53.3 reading in August after tumbling to a 3-year low in July after the referendum, which was reversed down to 48.3 from 48.2. Let's see how the European markets are reacting to this set of data coming from China and the UK, as well as we step into September, the month some folks believe you should sell out of the market and wait for the final quarter. DWTV Channel Television correspondent, my colleague in Frankfurt, Annette Westbach, is joining me live now for this conversation. Good afternoon to you, Annette. Let's kick the conversation from this spate of manufacturing data around the world. With Nigeria's numbers are out today, but let's speak to two of the world's largest economy, China on one hand, UK in the other. Very impressive PMI data. How are the markets in Frankfurt and around the world reacting to this latest data from these two big economies?
Of course, good data out of China is always good news. Also here for Germany and the German benchmark index DAX, and for in general for European bourses. So we had good indications overnight coming from China with the data, which also helped the DAX and the European bourses opening higher today. Looking at the direct impact from the PMI data from the UK, this is impressive. The pound rallied 1 cent after the release of the data, and the bonds, UK gilts, they dropped to the lowest in 1 month. So there is direct reaction to that, better than expected data. Of course, for the PMI from the UK, it shows as well how inflation might actually come back so easily with a lower pound, because, of course, prices will be higher in pound, and thus that means that inflation might be closer to the target of the Bank of England sooner than expected.
Annette, that's very interesting, but let's talk about one of the world's largest automaker, Volkswagen. The diesel emissions scandal that broke a few months ago from the U.S., from in the West, has spread all across the Atlantic and across the Pacific, now out of Australia. What reactions are we getting from the automaker today? Have they issued any statement? How are the markets and investors reacting to this in Germany?
Actually, Volkswagen itself issued a statement saying it's not really needed from the Australian authorities, because they already said they have that cheating software, had that cheating software in place. They've already said they are going to cure the fact that they had that cheating software in place also in Australia. But I guess the biggest question here is, how will they compensate consumers? Because there they have a very different treatment according to the jurisdictions they are operating in. For example, in the United States, it's very generous. People can hand back their cars. They get some sort of compensation, money compensation for having used that car, etc. pp. In Germany, for example, it's completely different. It's not that generous because, of course, consumer protection is not that high as in the United States. So I guess you will see a plethora of those claims from various regulators now coming towards VW, because everybody wants to assure they get a good deal for their consumers.
Annette, let's wrap it on a broader market. Welcome to September. Sorry, I forgot to say that early. So it's a brand new month, the final month in the third quarter, but some folks say this is a pretty bad month traditionally for Wall Street. What do you think? Should I sell? Should I hold? Or is it time to buy more?
I'm not sure whether you should sell or hold, but probably it's a good month also this month for shareholders, because look, there was no crisis in August, there was no summer crisis like in the last years, which spooked investors and also kind of set the agenda for the second half of the year. This year was a calm summer, rather positive in terms of more stimulus coming from the Bank of England. Talking about more stimulus, I think that's the name of the game also for the month of September, because we'll not have huge corporate news, because September, the earnings season hasn't started yet. But what will start is the central banks around the world. The European Central Bank next week is widely said to announce that they might actually extend their quantitative easing program longer than the previously set spring 2017, which of course next year. That would add more positive stimulus to equity markets. Of course, there might be some spooking from the Federal Reserve, because they could hike rates, but we've seen that already now also in the past, that people tend to concentrate on the positive news here as well, that the US economy is doing actually a lot better than people had expected, and that means also that the US consumer is doing a lot better. So I guess perhaps my bet is the equity markets will continue to rally.
Annette Wisbach, thank you very much in Frankfurt and the rest of your team. Let's continue the conversation around the global market space tomorrow when we come back Friday. How much is the price of a burger in Nigeria? That's about 50 cents, perhaps a little bit above that. But in South Africa, the fast food group called Famous Brands has bought Britain's gourmet burger kitchen for 2.1 billion rand. That's about $143.3 million, saving nearly a fifth on the price due to the weaker British pound in the wake of Brexit. South African group, which also owns casual dining chain Wimpy UK and fast food assets such as Steers and Debonairs, plans to double the upmarket burger chain's 75 British stores in South Africa in the next 5 years.